Good morning and welcome to Stock Market Today. It's Wednesday, October 9th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email where you will get daily stock ideas for you to consider in your inbox every trading day before the market opens. So U.S. equities finished lower in Tuesday's trading and near the worst levels of the day. All sectors were in the red, but the defensives outperformed. Financials were the biggest decliner on the day. Treasuries were mostly stronger, sending yields lower. Dollar was weaker on the yen cross, as you might expect in a defensive type environment, but stronger against the euro. Sterling was weaker on Brexit concerns. Gold finished slightly lower, and WTI crude ended the day down 20 basis points. So your outperformers were REITs, staples, and utilities. Your underperformers, financials, healthcare, and tech. As we get to the desk this morning, though, a bit of a reversal. S&P futures are up 80 basis points to start the day. Asian markets were mostly lower overnight, although we will note that China ended higher after a sluggish start. European markets are seeing good gains. Treasuries are weaker. The dollar is stronger on the yen, weaker on the euro. Gold up 40 basis points, and WTI up 1.2% to start the day. And I guess the best way to describe it is to say that the chop continues, as 2,900 was broken to the downside again yesterday, but we are regaining that level in futures trading here this morning. Beyond 2,900, key support is the 200-day moving average, now near 28.45. And then below that, to me, the real key level, the August lows at 28.20. A break of the August lows at 28.20 would complete a double top pattern here. And then you could start to think about downside objectives with the low of the pattern at 28.20 and the highs up near 30.30. You can start to think about where the market could potentially go on that break. Should we rally here? Resistance is in the area between 29.50 and 3,000. 29.50, obviously the breakdown level, 3,000, psychological resistance at the round number. RSI is holding bullish ranges for now, so still, barely so. Closed at a little over 40 yesterday, so lower bound of bullish ranges for that indicator. And Chaikin money flow is still bullish, although waning here a little bit with market weakness. We'll see what today's turn does. We'll see if the market can hold on to these early gains. Let's turn now to our market in a minute. What am I writing about in my note today to Chaikin Analytics clients? Well, based on our overbought, oversold indicator, the one that I look at on our charts here in Chaikin Analytics, markets are at or near oversold levels. SPY is oversold, IWM is oversold, and the Qs are rounding out of an oversold position, all as they test important support levels. As we said earlier, all sectors finished lower on the day. And sentiment on Wednesdays, I look at sentiment, and it remains fearful, actually pushing up to areas that increase the odds of a near-term rally. And we're actually starting to see that in the futures market here today. Low volatility stocks are what's leading the way, though, as volatility in the marketplace picks up. Futures, as I said, do point to a higher open here today. Ignore my typo. Chaikin power bars for the major indices. Dow has 0 bullish stocks, 7 bearish stocks. S&P 500 down 1.5% yesterday, 116 bulls to bears to 61 bulls. NASDAQ in line, down 1.5%, 11 bulls to 24 bears. Small caps, slight underperformer on the day, and big deterioration in their power bar ratio here today. Almost back to an even level now, 425 bulls for 419 bears. Bonds move higher in price, sending yields lower. According to the Chaikin Power Bar, large cap stocks are more bearish than small cap stocks. Major markets are mixed. Stock of the day, auto-generated by our algorithm based on the Chaikin Power Gauge rating, is Hawaiian Holdings. It's a transportation company. Closed at $27 yesterday. Big outperformer on the day, up over 7%. Power bar ratio, power gauge rating, is very bullish due to very attractive financial metrics, very strong price volume activity, positive expert activity, a little bit of weak earnings performance, but the 20 factors, 2, 3, 4, 5 in each of these 4 categories roll out to that very bullish rating. So what we have here is a stock that has been in a downtrend and is trying to stabilize. Now, our very bullish rating is met with a stock that continues to underperform the SPY. Now, the intensity of that underperformance has diminished of late, so potential personality change here when looking at relative strength, but we're not there yet. Stock is oversold based on our overbought, oversold indicator, and money flow is mixed at best. However, recent rally has retaken the long-term trend line. A pullback has held above that level, and then we had that nice 7% pop yesterday, potentially setting the stage for this being a name that we want to consider. I'm not there yet, largely because of the relative strength. Big part of our process, if I had to break down everything that we talk about on the charts, if I had to break down the 2 main components that have to be in line for me to want to get excited about a stock: power gauge rating, bullish or very bullish, and I like to see the stock as an outperformer. To me, those are the 2 most important data points on this chart. After that, everything else kind of comes down to timing, right? Are we oversold, bullish money flow, etc.? But the 2 main components, power gauge rating has to be bullish or very bullish, and the stock has to be outperforming. We're not there yet on Hawaiian Holdings HA. Let's add it to a bullish watch list today and continue to see if this relative strength improves. Taking a look now at our sector tracker, moving to the major sectors over the last 5 days. Only one green over the last 5 days, and that is real estate, right? One of the bond proxy groups, one of the defensive areas of the market that we've been highlighting that we continue to like. Beyond that, leadership still is very defensive, right? The outperforming areas, i.e. down less than the overall market, are very defensive in nature, right? Comms have a defensive component. Utilities, obviously, a defensive component. Healthcare, most parts of healthcare are defensive in nature. Middle of the road tech, staples, and discretionary. Industrials continue to be under pressure following weak economic data, lower yields. Bearish for financials, or a headwind for financials. Materials and energy round out the bottom of the list, and it's almost as if energy is cemented in that bottom spot. Obviously, that can change in a heartbeat, but right now, from an absolute basis and a relative basis, energy continues to be a weak area of the market, continues to be an area of the market that we want to avoid. We want to continue to focus on the areas that are outperforming, because when the market does stabilize and begin to move higher, the groups and the stocks that held up the best through the choppiness tend to be your leaders. And right now, I mean, no 2 ways about it, it's defensive in nature. Our industry in focus today: bank services, which obviously are going to have a hard time moving higher with falling rates. And we can see that here. Over the past 6 months, bank services subsector has underperformed the S&P 500 by 7%. However, the power bar ratio, which measures future potential, is strong. So the fundamentals are okay here. 15 bullish or very bullish stocks, 8 bearish or very bearish stocks, earns it a rank of number 6 of the 21 subsectors that we look at. Has moved down 1 slot over the past week. But if you want to look for some ideas within the financials, some of the stronger names are FNB Corp, ticker FNB, very bullish rating. First Horizon, FHN, very bullish rating. And Valley National Bank Corp, VLY, also with a very bullish rating. Just be mindful of the fact, though, that should yields move lower, it will be a headwind for this group. And we're going to be able to take a look at that right here. Here's KBE, the ETF that tracks the group. Has a neutral power gauge ETF rating, but we can see not much traction, sideways to choppy trading for the better part of a year. But what's really important is the relative strength. Look at the relative strength over the past 12 months. Been an underperformer, continues to be an underperformer. The intensity of that underperformance is picking up once again. Now, the fund is oversold, was kind of mixed to slightly bullish shake in money flow below a long-term trend line. Just not enough there to get me excited, especially with my view being that there's scope for rates to move lower here in the U.S., right? Hard to get excited about the bank stocks. And you can see it here, underperforming with a neutral ETF rating. Taking a look at what's trending now. Yesterday's S&P 500 gainers and losers are movers and shakers. MSI could be a positive beneficiary to the U.S. blacklisting some Chinese tech companies. Stock higher by 1.75%. Newmont, no real news there, rallying with gold. LHX, part of the aerospace and defense industry group that we've been bullish on. We've highlighted, been a market leader for months now. There was a note out of Barclays yesterday with some positive comments, sent that stock higher 1.7%. No real news on American Airlines, send that stock higher 1.66%. DHI, coming to us from another area of the market that we've been highlighting, the builders, right? Focus on the relative strength. If you focus on the relative strength, you're more likely to find names that are going to outperform. Names like LHX and DHI that can rally even in a down tape. Focus on the winners. That's why relative strength is so important. Loser side of the board. Nectar down 13%. Caught a downgrade from Goldman Sachs. They put a $16 price target on it. Waters down 6.92%. No real news yesterday, but did catch a downgrade today from Barclays. And then the other three, Perkin-Elmer, PKI, Boston Sci, BSX, and Thermo Fisher, TMO. Not a lot of company-specific news, but they were all down on higher than normal volume. And one of the themes that I see here is that these are all companies that sell equipment into the healthcare space. Now, I didn't see any specific news, but when I see similar names all down a similar amount, could be signs of a theme developing in the marketplace, right? They sell big equipment at big dollar prices into the healthcare space, and they were all down big yesterday on big volume. So potentially something percolating in that area of the market. Turning now to what we're writing about in our note today. Wednesdays are sentiment day, and one of my favorite sentiment indicators is the put call ratio. Why do I like this one? Because this tells us what people are actually doing with their money, as opposed to some of the surveys where they ask people questions: are you bullish, are you bearish? This is how people are actually expressing their views with their money. And what we can see here is the put call ratio is now spiking towards a level that has marked local lows for the market in the past, right? The CBOE equity options put call ratio, this is a 13-period moving average of that metric. And when it starts to get near and above 0.75, that has tended to coincide with a local bottom here in the market. So when I say sentiment is bearish, pointing to the potential for a near-term rally, this is what I mean. This chart goes back 5 years, and you can see instances where when we spike over 0.75, market tends to be putting in a short-term bottom. Keep that in mind as this indicator starts to creep towards that level here today, and you can see it pretty clearly. Low vol in a rising volatility market. What we're looking at here is the Invesco S&P 500 low volatility ETF, ticker symbol SPLV. And we can see a nice steady uptrend from those 2018 lows. Fund is above a rising long-term trend line. Recent breakout and a couple of tests have held support at the $56 level. Fund closed at $56.81 yesterday. But what's interesting to me is that on those pullbacks, the RSI holds within bullish ranges, right? So momentum is confirming this uptrend, meaning that the uptrend is strong, right? As volatility is rising, investors are gravitating towards the areas of the market that are lower in volatility. It's another derivative, if you will, of defensive positioning in the market, right? Along the same lines of staples outperforming and utilities and REITs outperforming. When investors are a little bit more fearful, they'll gravitate towards the lower volatility area of the market. And you can see that here. Relative to the SPY, SPLV is breaking out and moving higher from this recent consolidation pattern. So what I like to do is then figure out how likely is this trend to persist. And I say odds favor it persisting because SPLV has a bullish ETF power gauge rating at Chaikin Analytics, and there are 15 bullish stocks and 13 bearish stocks in the fund. So the ratio is skewed in favor of the bulls. From there, I like to drill down and look at some of the holdings of the fund to come up with ideas. And I shake out on a name like Globe Life here today, right? Globe Life is a holding in SPLV, has a bullish Chaikin power gauge rating, strong trend, strong industry group. Market and model are in agreement as that bullish rating is met with outperformance. The stock is oversold with bullish money flow and holding above a rising long-term trend line. For those of you who read my morning note, you will notice that Globe Life, ticker GL, is my highlighted stock of the day. That's going to wrap it up. Head over to chaikinanalytics.com/today to sign up for that email. Get daily stock ideas in your inbox every trading day before the market opens. I'll be back tomorrow. Have a great day, everyone.